Hello and good morning, guys. Good morning, everyone. Please confirm if I am audible and visible to you. Good morning, everyone. Good morning. Please confirm if I am audible and visible to you. Good morning. Good morning, Ganesh. Good morning, Anjum. Good morning, Gaurav. Good morning, Ishita. Prashant. Good morning. Good morning, Rani. Om Kakati, Vishnu, Vivek, Umesh, Mansi, Sandhya, Abhishek. Good morning. Good morning, Sharan, Musina. Good morning. Please confirm if I am audible and visible to you. Please confirm. Good morning, everyone. Good morning, Yuvraj. Yuvraj, good morning. Please confirm if I am visible and audible. Perfect, perfect. Yes, sir, you are very much visible and you are very much audible. Absolutely great. So, guys, how are you doing? I'm doing absolutely great and I'm eagerly waiting for the test which is scheduled on 19th June 2022. Test for all of you which is scheduled on 19th June 2022. The test which has been scheduled for all of you. So what are the chapters of the test? Chapters of the test are ROI and PAN. ROI and PAN, which we are going to start today in a short while. That is the chapter which is there in the test. Which is the second chapter which is there in the test? Yes, I had committed that we will take test for 2 chapters and not 1 chapter. 2 chapters will be coming for test. Yes, sir. Fiza, good morning. Bhavya Jha, good morning. Gaurav Anand, good morning. Good morning, everyone, and welcome to this beautiful Thursday morning. Yes, sir. So, what is the second chapter? Second chapter is assessment, proceedings. Yes, the chapter which is related to litigation related to income tax. That is the chapter. So, 2 chapters chair test on Sunday, right? We need to really come up with very strong preparations for these 2 chapters. These two are important chapters of your syllabus, guys. They will definitely hold good weightage in your examination. Maybe not as heavy as subject topics like PGBP, capital gains, not as heavy as those topics, but yes, a reasonable consideration will be given for these chapters as well in your examination. For CMA final as well as CMA intermediate students, these chapters are definitely very, very, very important chapters. Yes, they are very small, they are concise, but a practical or theoretical question, basically theoretical question coming from these chapters is very, very probable. So you need to prepare these chapters very, very well. Chirag Khemani, good morning. Good morning, Akash Chabra. Good morning, everyone. All right, so guys, today we are going to start our chapter, Return of Income. We are going to start our chapter, Return of Income and PAN. So first of all, I'm going to tell you what do you mean by return of income. What is the meaning of this word, return of income, or ROI? Return of income is in short known as ROI. So let us first of all know what is the meaning of this word, return on income. So some meaning of this word, return of income is a summary. Return of income is a summary of incomes earned and taxes computed by the assessee or the taxpayer. Assessee or the taxpayer. So if I ask you to define what is return of income in layman words, guys, in layman words, in very, very simple words. So the return of income is a summary of incomes earned plus taxes computed by the taxpayer or the assessee. In very, very simple words, return of income means giving a bureau of your incomes earned during the particular year to the government of India. Telling government of India, hey, government of India, look, we have earned these many incomes during the year, and this is the tax which according to Income Tax Act is payable by us, and hereby we are paying the taxes which is due to government of India. In very, very layman, in very, very simple terms, return of Return of income is a summary of the incomes which have been earned and the tax liability which has been computed. That is known as return of income. Sir, this is very, very simple. What is so challenging about it? Sir, we prepare this return of income on a daily basis. How? How do you prepare this return of income on a daily basis? When have you last prepared the return of income? Sir, we make in our questions, we make a summary of what incomes have been earned during the year. Sir, we make this kind of a format. Okay, sir. Particulars, amount. And what we write over here is salary income, so and so amount, house property income, so and so amount, PGBP income, so and so amount. Then we total up all these things. We total up all these things. This is our total income. Then we give deductions and whatever eligible benefits are there. We give all those things. And so finally, we compute the tax liability. So we make this, right? So, sir, is this what you are calling as return of income? So this we do on a daily basis. Is this return of income? Because the definition which you have given is hinting towards this format, which we have been making in our computation of income chapter. So it's so easy. We have been making this format for a very long time. So, sir, is this return of income? Do you call this as return of income? Guys, answer is no. This is not return of income. This is computation of your income and tax liability. Return of income will be a very, very detailed form whereby you will be required to submit many, many details like who's your employer from which you have earned income. How much TDS has your employer deducted? What is the TAN and PAN of your employer? Since when are you working with this particular company? Where is this company located? Is it located in Delhi, Mumbai, Chennai, Hyderabad? Where? So all these details with respect to salary income, return of income form will be asking you. So return of income is not merely, disclosing what is my income. In return of income, you have to give a detailed statement of what are the sources where your income has come up, right? Similarly, you have to also give details of what are the HRA and exemptions which have been claimed while computing this salary income. What are the deductions which you have reduced while computing this salary income? All these details you have to fill in the return of income. So return of income is a detailed format. And yes, Government of India will give you a format in which your return of income is required to be prepared. So it is a detailed format. It is not a summary. It is not in so much of brief that those informations are required to be given. It is a little detailed. So salary income, which is which amount you are aware of, that income along with necessary details which Government of India wants to ascertain whether your income is calculated correctly or not. All those details are to be filled in the return of income form. Similarly, guys, for PGBP income, it's not enough to only write that this is my PGBP income, okay? In return of income, you have to properly create a profit and loss account and tell what are your sources of income, tell what are your expenses, and what is the net profit which you have earned during the year. Similarly, in PGBP section, you also have to prepare balance sheet. You have to give details of your debtors, creditors, all the assets which you have in your business. You have to give details of inventory which you have in your business. So all the balance sheet items are required to be disclosed in great detail. Who all have deducted your TDS? What is the GST liability which you have paid, and what is the reconciliation between the income which you have shown in GST versus the income which you have shown in Income Tax Act? So return of income is not merely telling what is your total income like this. Return of income is a little detailed process, process whereby the Government of India wants you to give minutest of minute details of what have you earned during the year, of what have you realized during the year, and what is your income. So the details which are required to be submitted, they are precisely the contents of return of income. So yes, return of income is a prefixed format whereby you give details of your income earned and your tax liability which you have earned during the year. That is known as return of income. Sir, when is this return to be submitted to Government of India? Guys, of course not during the year. Once the year has ended, after that you are supposed to file the return of income to Government of India. Simple. Because during the year, if you file your return of income, then you will not be able to compute what is the total amount of salary which you have earned, because it's still, the year is continuing, right? In middle of the year, you are not aware what is your bonus which you will receive from your employer. So it is only after the end of the financial year when we can ascertain our income, when we can ascertain our tax liability, and then, guys, the return of income is required to be filled, or to be filled in the prerequisite formats. So return of income is a format which is required to be filled after the closure of the financial year. Once the financial year closes, after that, the return of income is required to be filled. So is it our wish that we file return of income whenever we want after the closure of financial year? So is it that, I can file my return of income after 5 years of closure of financial year, after 10 years of closure of financial year? No, 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 guys. There's a strict timeline which has been given to you after the end of the financial year, by when you have to mandatorily file your return of income. And we'll be studying those timelines in our today's lecture. So yes, that was a brief about the return of income. How is it filed? Why is it filed? What is the need of filing such a return of income, and the details of income earned? What is the need of filing these details? Why Government of India is so adamant about these return of income? All these things we have seen. Now let us get on to our chapter. Let us get on to our portion of the text. All right, return and pan. And yes, guys, I'm going to refer to the KPTR, which are given in my book. KPTR means key points to remember. This is summary of each of the chapter which I've given at the end of my book. So this is the KPTR. And let me just expand it a little bit so that your visibility is absolutely clear, so that you are able to see it properly. I'll expand the size of the document. All right, now I hope you are able to see it clearly. Yes, you are able to see it very, very clearly. All right. So what do you mean by original return of income? Section 139(1). This is the first section of return of income, section 139, subsection 1. And it talks about the original return of income. So what do you mean by original return of income and duplicate return of income? Is there something called a duplicate return of income as well? No, 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 guys. There's nothing called duplicate return of income. But Government of India will give you an opportunity to revise your return. To revise your return. Suppose you've done any error, you've done any mistake in the return of income, then Government of India will give you an opportunity to revise your return. So there are two kinds of return: original return and revised return. Therefore, the word is used, original return of income. So these are various types of return of income. There is one type of income which is belated return. If you have missed the timeline of filing the return of income, then you file a belated return. That is another kind of return of income. So this is original return of income, section 139(1). Every person, being a company or a firm, so different kind of assessees have different thresholds. Different kind of assessees have different thresholds. Okay. So every person, being a company or a firm, if you are a company or you are a partnership firm, or you are a person other than a company or a partnership firm. So if you are an individual or you are an HUF, etc., if his total income exceeds the basic exemption limit, so the return of income is required to be filed by company or partnership firm, irrespective of their income. Whether the income is 0 rupees, 1 rupee, 2 rupee, 3 rupee, doesn't matter. They have to file their return of income if you are a company or a partnership firm. However, for other types of assessees like individuals, HUF, they are required to file their return of income only and only if their income exceeds the basic exemption limit. Now tell me, what is the basic exemption limit? Basic exemption limit is 2,50,000 rupees. So up to 2,50,000 rupees, the income is exempt from tax. Since the income is exempt from tax, up to 2,50,000 rupees. So if you are an individual and HUF who have their income up to 2,50,000 rupees, then you do not require to file your return of income. Don't give Bureau to Government of India. Government of India doesn't want to check it. You're too trivial, according to law. You're too trivial to be utilizing resources of government on your return of income. So if you have income which is even below the basic exemption limit, which is even below the basic exemption limit of 2,50,000, then you are not required to file the return of income. You are exempt from filing the return of income. Shall furnish a return of his income. So company or partnership firm, irrespective of their income, they are required to file their return of income irrespective of income. And in case of individual HUF and other assessees, only if their income is above the exemption limit, they are required to furnish their return of income to Government of India. That is the key provision. Next. Now, in the following cases, now, there is a rule that a person other than the above assessees are required to furnish their return of income only if their income is above the exemption limit. But in certain cases, even these people are required to furnish their return of income even when their income is below the exemption limit. So suppose if individual has an income of say 1,50,000 rupees, an individual has say an income of 1,50,000 rupees, then he is exempt from paying income tax, and he is exempt from filing the return of income also because his income is below the basic exemption limit. But if that individual falls under any of these categories, then even if his even if his income is below exemption limit, he is required to file his return of income. Let's see what are these exceptions. In the following cases, a person other than company firm is required to file his return of income even if the total income does not exceed the basic exemption limit. So even if the total income doesn't exceed the basic exemption limit, in following cases, an individual is required to file his return of income even when his income is below the basic exemption limit. All right, sir, let's read those cases. He or she is a owner, beneficial or otherwise. Either he's a real owner or a beneficial owner. He or she is a owner of any asset, including any financial interest in any entity located outside India, and has signing authority any account located outside India. So, yes, this particular person doesn't have any taxable income in India, or he's earning very minimal taxable income in India, but this particular person has got some assets which are located outside India. He has got some assets which are located outside India. So, suppose he has a house property in Singapore, he has a house property in United States of America, or he has financial interest in any entity located outside India. What do you mean by financial interest? Financial interest means he's holding shares of, suppose Amazon Inc., which is located in United States of America. He's a shareholder of Amazon Inc., or he's a shareholder of Facebook. Okay. So if a person is not earning good enough income in India, but he is owner of any asset which is located outside India, then that particular person is definitely required to file its return of income in India, irrespective of the fact that his his income is below basic exemption limit. Now, sir, what if he is earning income below 2,50,000, but he has assets within India? He doesn't have assets outside India, but he has assets within India. Guys, if he has assets within India, then he's not required to file his return of income if his basic exemption limit is not breached, is not crossed. So simple as that. If his basic exemption limit is not crossed, then only if that person has assets outside India, only if that person has assets outside India, then he is required to file his return of income. He or she is a beneficiary of any asset, including any financial interest in any entity located outside India. Now, this is a indirect way of giving benefits of a foreign asset. So, guys, number one, you can be direct owner of an asset which is located outside India, right? There's a house property in Singapore. You can be owner of that house property. That is one direct way of gaining benefit of a particular property. There are indirect ways of gaining benefit also. What are the indirect ways? Indirect ways are the owner of that particular property is someone else who's located outside India, but the owner has an agreement with you that you will recover all the rent which is received from that particular property, or you will enjoy all the ownership rights or the benefits which are related to that particular property, or after the death of that particular person, you are the person who will inherit that particular property. So indirectly, you have beneficial interest in that particular property. So either you own the property or you have any beneficial interest in the property. In both the cases, you will be required to file your return of income even if your income is below the exemption limit of 2,50,000. So this is the second exception. Third exception, he has deposited an aggregate amount exceeding 1 crore in one or more current accounts. So if you have deposited during the current year and a sum of amount 1 crore in a particular current account, in cash has been deposited in the current account, then you are required to file your return of income. He or she has incurred foreign travel expenses of aggregate of 2 lakhs or more for himself or any other person. So that particular person has incurred a foreign to travel expense. He's went to Singapore, he's went to Thailand, went to Malaysia, because in 2 lakh rupees, guys, only these countries are possible. I'm not naming United States of America or Europe or something like that because they're a little expensive. So if he has incurred 2 lakh rupees or more, 2 lakh rupees or more than 2 lakh rupees in visiting any foreign country, and yes, it's 2 lakh rupees or more, so it can be 10 lakh rupees also. So United States of America also included over here. So he has visited USA, he's visited Europe, he's visited all the parts of the world for tour and travel, and he's claiming that his income is 1,50,000 rupees per annum. So he's definitely required to file his return of income so that the government of India can analyze how can a person who's earning 1,50,000 rupees per annum can enjoy a vacation of 2 lakh rupees in a foreign country. Government wants to analyze this, and to analyze this, government of India will be required to scrutinize the return of income which is filed by this particular person. Next exception is he or she has incurred expenditure of an aggregate of 1 lakh rupees towards consumption of electricity. So that particular person has paid an electricity bill of more than 1 lakh rupees in the year, paid an electricity bill of more than 1 lakh rupees in a year. If he has paid electricity bill of more than 1 lakh rupees in a year, then even if his income is below 2,50,000, he will be required to file his return of income. So these exceptions are applicable to people whose income is below 2,50,000, but they demonstrate that that is not true. These indicate that whatever income they are disclosing, it's not true. There is some iota of doubt in minds of the income tax department that yes, we should scrutinize on analyze the return of this particular person who's incurring 2 lakh rupees for a foreign travel, and he's claiming that I have income of only 1,50,000 rupees. How is it possible? A person who's incurring expense of 2 lakh rupees in foreign travel, how can he have income of only 1,50,000? Now you can say that, sir, maybe he has some income which is inherited by his forefathers, or he has some income which he has earned in earlier years, and he has paid taxes on that income in earlier years. He's saved them, now he's spending it. Okay, prove to government of India. We have no problems in it. This is very much possible that when I was earning, I had accumulated money. Now I'm spending money. It is very much possible. Prove to government of India, file a return of income and prove it to government of India that yes, you are actually incurring the expenses on the basis of the past income, past year's income which you have earned. Prove that to government of India and you'll be fine. You'll be okay. But filing of return of income, filing of the Bureau, the summary is very, very important, because unless until the return is filed, government of India will not be able to scrutinize you, will not be able to check your details. To check your details, to facilitate the government of India to check your details, the filing of return of income is mandatory activity. And therefore, return income filing is very, very important aspect. Now, guys, what is the benefit of filing return of income? Filing return of income will make you under the ambit of the scrutiny. If you have not filed a return of income, then it will be difficult for government of India to scrutinize you. If you have filed the return of income, then government of India will easily be able to scrutinize you. You come under the ambit of scrutiny, because whenever the return of incomes are picked, only those people who have filed the return of income, those incomes are picked up for scrutiny. So yes, the government is asking you to file your return of income at least, so that it's government's wish whether they want to scrutinize you or not. It's government wish. Okay, they will decide whether you're doing some wrong or not, but at least file the return of income so that government knows about you. All right, so sir, let's talk about the formats. I've told you guys there are fixed formats for filing the return of income. There are fixed formats for filing the return of income. So a person who's earning salary income has got a different form. A person who's earning PGBP has got a different form. A person who's earning PGBP and some other income, he's got a different form. So there are different formats on the basis of which the return is required to be filed. Sir, tell us one thing. So what is the need of so many forms? What do you mean by ITR? Income tax return. What is the need of so many forms? 1, 2, 3, 4, 5, 6, 7. So why so many forms? Why not only one form? Why not only one form? Whether your income is salary, whether your income is PGBP. So, sir, if we file ROI one time, then is it compulsory to file ROI for rest of the life? No, no, Rani, not compulsory. If you file your return of income for the one time, then in the next year, if your if your income drops below the limit, then you don't file the return. It's not mandatory that you have to file the return for your entire life. If once you file the return of income, not necessary at all. You will analyze it every year. Okay. Sir, why so complications are there? So many complications are there. Why 7 formats are there? So government of India should have given us only one format, that this is the form which you have to fill to show your summary of income. Sir, in that format, whosoever doesn't have PGBP will mention 0 against PGBP. A person, if he doesn't have salary, he should mention 0 against salary. So why is it that, salaried class have a different form, PGBP class have a different form? Why is it so, sir? Why so complicated? The reason is very, very clear. Guys, for salaried class, if you are only earning salary income, then your form will be a mere 4-page simple form. Simple. What is the Hindi word of simple? What is the Hindi word of simple? Please write in the chat box. What is the Hindi word? How do you define simple in Hindi language? Please write in the chat box. So if you are earning only salary income, you have only 4 pages of very, very simple form. A very, very simple form. Because Government of India doesn't want to know a lot of details about you. They just want to know who's your employer. Okay. Yes. Meaning of word simple. In Hindi. Translation of word simple in Hindi. Samanya. Rani saying Samanya. Ashish Dubey saying Asan. Mansi, Sehaj. Yes. Yash, Asan. Tarun says Sehaj. Yes. Guys, this form is known as Sehaj. And what is the meaning of Sehaj? Simple. What is the meaning of Sehaj? Simple. So if you are earning salary income, if you are earning income from salary only, we won't, trouble you by giving you a form which is, 14 or 15 page form. We don't want to trouble you. We don't want you to be confused. Because if we give you a 14-15 page form where PGB details are also there, and we ask you to put 0 everywhere, you'll be confused. Won't you be confused? So for your benefit, the forms have been bifurcated into various parts. If you are earning a very simple income, like salary income is a very, very simple and straightforward income. There's no complication in salary. There are no deductions in salary. There are only 3 deductions, very, very simple deductions. If you are earning an income in salary, then we will give you Sehaj form, very simple form, 4-pager form, only 4 or 5-pager form. That's it. Fill it. It's easy. Okay, in Tamil, it's known as Elia. Elia in Tamil. Saral. Om Kakati Saral. Okay, Saral is a good word. Junaid Asan. Mandeep Sehaj. Gaurav Sehaj. Srividya Sehaj. Yes, good. Elia. Elia in Tamil. Elia. Okay. So this Sehaj means Elia. What is Sehaj? Sehaj is Elia. Elia means simple. A simple form will be given to you. So for your benefit, 7 forms have been prescribed, not for Government of India's benefit. For your benefit, 7 forms have been prescribed. Government of India could have done this, that they have given one form for all, but you will be confused in that situation. If you are not earning PGP income, still you had to put 0 everywhere in PGP income. Why do you have to face that trouble? Why do you want to face that trouble? That trouble is not required to be faced. So ITR number 1, Sehaj. Sehaj means simple. And Sehaj is the easiest of the forms which are available. So Sehaj is filled only by those people. Sehaj is filled only by those individuals who have income from salary, one house property, does not have any brought forward loss, other sources except winning from lottery or income from race horses, and having a total income of up to 50 lakhs. So a simple person who's a salaried class, who's having income from salary and one house property, not 2 house properties, one house property, and other sources income is also there, like interest on fixed deposit. Guys, this is there for everyone, interest on deposits, whether it's fixed, whether it's RD, or whether it's the usual bank account, interest income is earned by almost everyone. Okay, so other sources income has been earned by this particular individual, salary income has been earned by this particular individual, and one house property income has been earned by this particular individual. If you only have these three sources of income and total income is up to 50 lakh rupees, then you are freed from filing any complex form, and you will fill only and only very, very simple form. Okay, Srividya is asking me to pronounce it in Malayalam also. In Malayalam it is known as alupam. Okay, Elia in Tamil, alupam in Malayalam. Okay, this is elupam. Sahaj is elupam in Malayalam. Okay, great. Now, guys, I don't want to pronounce all the languages of the country, the same word in all the languages. Okay, so now no more languages. Okay, that's it. 2 languages are more than enough for one day. Okay, exclusions. Who cannot fill Sahaj form? Those people who are directors of the company, they cannot fill Sahaj form, because directors means you're more than an employee. Director means you are more than an employee. And since you are more than an employee, therefore, Sahaj form is not for you. Investor in unlisted equity shares. So if you are an investor in an unlisted equity share, if you have invested your money in unlisted equity share, then you will be not allowed to file the Sahaj form. If you have invested your money in unlisted equity shares, if you have purchased shares of listed company, then it's okay. But if you are an individual earning salary, other sources, and house property income, and you have invested in unlisted equity shares, which means a company which is not listed, means you have your own company, right? Then you are not allowed to fill Sahaj form. Sahaj form is not for you. Third, has any brought forward or carried forward loss under the head income from house property. So if you have any carried forward loss which you want to set off in the current year, you will not be allowed to fill a Sahaj form. So why Sahaj form is not allowed to be filled? Because, guys, in Sahaj form, there is no column where carry forward of loss can be mentioned. You cannot have the facility of mentioning carry forward of loss and setting it off. You don't have that facility. Okay. So any example of unlisted equity share? Yes, very much. So if I open my own company, okay, my company's name is Nikkhil Gupta Private Limited. Nikkhil Gupta Private Limited. I register myself as a company. I am providing coaching to CMA students, and I register myself as a company, Nikkhil Gupta Private Limited. Now, this particular company is not listed on stock exchange. It's not listed on BSE. So if you want to purchase shares of Nikkhil Gupta Private Limited, you have to come to me. You cannot go to a stock exchange. You have to come to me. This is an example of unlisted equity shares. This is an example of unlisted equity shares. Okay. So shares which are not listed on stock exchange, but which are private companies whose shares can be bought only from the promoters of the company. I am the promoter of the company. If you want shares of this company, you come to me. I will sell the shares to you for a consideration. That is unlisted equity shares. Okay. Itr Two. Who is going to fill Itr Two? Itr One we have studied. Sahaj. Itr Two. For individual HUF not carrying out business or profession under any proprietorship. So this particular Itr Two is for individuals and HUFs. This is for individuals and HUF who are not carrying out business or profession under any proprietorship firm. So the people who are not carrying PGBP business, who are not carrying on PGBP business, there's no business or proprietorship firm business which they are carrying on. First of all, HUF is also included over here. Over here, HUF was not included. So all the HUFs have to file their Itr Two if they are not earning PGBP income under any proprietorship firm. They are not having any PGBP income. So if they are having any PGBP income, then, guys, they have to fill Itr Three for individuals who are having income from proprietary business or profession. Then they are required to file Itr Three. But if they are individuals who are not having PGBP income, but they might fall under any of these categories, right? They might fall under any of these categories. Individuals who are salaried class, but they are directors of a company. Individuals who are salaried class, but they have invested in unlisted equity share. Then they will come under Itr Two category. And the individuals who have salary income as well as PGBP income, in a proprietary business, then they will come under Itr Three. So Itr Two, no business. Itr Two, no business. ITR 3, yes, business in a proprietorship firm. ITR 1, only for individuals having salary income, other sources income, house property income, no carry forward of losses. If you are earning salary income, other sources income, house property income, and also have carry forward of losses, then you have to file ITR 2. You have to file ITR 2. That is the bifurcation. Why, sir? Why such a difference? The difference is because ITR 2 will be a lengthy form. They will give you opportunity to mention your brought forward or carry forward losses, and they will give you an opportunity to set off those losses with your current year's income. ITR 2 will give you that opportunity. ITR 1 will not give you that opportunity, because usually in case of salary income or income from house property, carried forward losses are rare. They are little less, not non-existent, but little less. So ITR 2 for these individuals, ITR 3 for individuals who are carrying on business along with earning salary. So ITR 3. Now ITR 4, please, very important, very important. Individual HUF who are carrying on business, ITR 3, right? But for people who are carrying on business on a presumptive income basis. So what is presumptive income? Hey, remember PGBP section, PGBP chapter. We had studied presumptive taxation like section 44 AD, section 44 ADA, presumptive taxation. I'll make you remember it, okay? So if you are a small retailer, if you are a small businessman having turnover of less than 2 crores, then guys, you will be required to not estimate your income on a precise basis, but on an estimate basis. That is 8% of your gross receipts or 6% of your gross receipts, as the case may be. So this is presumptive taxation. You are presuming your income. So if you are falling under presumptive taxation regime and you are earning business and profession, then you will be required to file ITR 4. So ITR 3 is for people who are not coming under presumptive taxation regime. They are required to file ITR 3. ITR 4 is for people who are falling under presumptive taxation regime. That is the difference between ITR 3 and ITR 4. So for presumptive income from business and profession. So both are business and profession. 3, 4, both are business and profession. The only difference is fourth is for presumptive taxation business and not for normal business. Yes, sir, absolutely. Abhishek Mathur is saying, is it better to file ITR 2 instead of ITR 1? No, Abhishek Mathur, ITR 1 is the best. It's tension free. Abhishek Mathur, ITR 1 is the best. It's tension free. Sehaj, Epulam, Elia. This is the simplest form. I would definitely want to fill ITR 1 if I am eligible to fill ITR 1. ITR 1 is very easy. ITR 2 is difficult to file. So I will not file it. Okay. All right, sir. So ITR 3 and 4 for PGBP and 4 is for presumptive taxation. However, the form is not used for individual who is either a director in a company or has invested in a listed equity share or has brought forward carry forward loss under the head income from house property. So a person who is having presumptive taxation income, which means he is offering income on a presumptive basis, that person, if he is also a director in a company or he's invested in unlisted equity shares or he has brought forward loss, then he is not going to file ITR 4. So guys, ITR 4 is a very simple form. Again, Sugam. Sugam is another word meaning, another synonym of simple. Okay. ITR 4 is also very simple. So if you're a director with a company or you have invested in unlisted equity share or you have brought forward losses, then you are not eligible to file ITR 4 even if you are having presumptive taxation. So presumptive taxation is applicable only and only for the people who have presumptive taxation income and they are not a director. They have not invested in unlisted equity share. They have no brought forward losses. You have no income from other income from house property losses. All those people are not required to file ITR 4. So ITR 4 applicable only to people who are not a director. Okay, not a director in a company. Okay. Perfect. Next question. ITR 5. What is the form? Okay, Vivek, your answer will come just now. Vivek, your question's answer will come just now. What if I fall under 2 or 3 category of filing return? How can you file under 2 and 3 category? Oh, so if you file under 2, if you get classified under 2 or 3 category, then you have to file 2 or 3 form. You cannot file one form. I wish I could file one form. Okay. I wish I could file ITR 1. I will always wish that. But if I'm not eligible, like I'm director of a company, then I cannot file ITR 1. Simple. Then I have to file wherever I'm falling. If I'm falling under 2 and 3, I will have to file 2 and 3. So 2 and 3 are basically a little difficult, little complex form. If my income is such that it is falling under 2 and 3, I have to file 2 and 3. There's no other alternative. But I would always want to file under Sahaj. I would also want to file under the category of simplest form. Okay, sir, got it. All right, then comes the ITR 5. Okay, so for any other person except for individual HUF company person filing ITR 7, for all other person except for the individual HUF or the company, ITR 5 is required to be filled. Definition of persons we have studied in great detail in our basic concepts chapter. So all other persons except for individual HUF and company, they are required to file ITR 5. Any other person, they are required to file ITR 5. That is the ITR 5 definition. Then ITR 6 for companies other than companies claiming exemption under section 11. So the companies who are claiming exemption under section 11, they are not supposed to file ITR 6. Apart from that, all the companies are required to file ITR 6. So ITR 6 basically is for companies, who are working. Obviously, if it's a company, then it's mostly into PGVP business. It will be into business income. It will earn income from business or profession. So if you are a company who's earning income from business and profession, then ITR 6 is for you. And needless to say, ITR 6 is one of the lengthiest forms of the Income Tax Act because it is related to PGBP. I'm just Googling what are the number of pages of ITR 6. Okay. What are the number of pages which are there in ITR 6? I'm just Googling it. It's a long form. I know this, but I don't exactly remember the number of pages. ITR 6, one of the longest forms for sure, and it's really tiring. It's really tough to fill all the pages of ITR 6. You have to file many details. Each and every individual detail you have to file. So yes, it's a lengthy form. So ITR 6. ITR 6. How many pages are there in ITR 6 which you need to file? Okay, so pages are not given, guys, but approximately 29 schedules you are required to file. Number of pages are not there, but approximately 29 informations that you are required to file. However, in salary, you have to file only 4, 5, 6 columns. That's it. Only 6, 7 schedules are there in salary income, ITR 1. In ITR 6, you have 29 schedules which you have to file. You have to file minutest of minute details, like details of MAT, minimum alternate tax, details of deduction which are claimed under chapter 6A, detail of deduction under section 80, which is 6A. Okay, then section 10 deduction. Then what are the brought forward losses, details of brought forward losses, details of carry forward of losses. All these details are required to be filled in ITR 6, a very lengthy form, guys. And even balance sheet and profit and loss account is required to be filed. Balance sheet and profit and loss account is required to be filed under ITR 6. But yes, ITR 6 is not for people who are claiming exemption under section 11, charitable and religious trust. So if you're claiming deduction under exemption under section 11, you're not required to file ITR 6. For other companies, for all the other companies, the form which is available is ITR 6, one of the lengthiest forms of the Income Tax Act. Then ITR 7. ITR 7 is for persons, including companies, required to furnish their returns under section 139 4A, 139 4B, 4C, 4D, 4F. So guys, in all these sections, you'll be seeing in your book. In the summary, I have not taken up these sections. Deliberately, I have not taken up because these sections are a little less important and time is not permitting me to take all these sections. But you'll find all these sections are relevant to particular category of assessees, like political party. Political party have a different form. Then religious and charitable trust, they have a different form, which is to be filed in return of income. So for all the other assessees who are required to file their return of income, for those assessees, there is ITR 7. ITR 7 is for those assessees who are mentioned under 139(4)(b), 4(c), 4(d), 4(f), which is various kind of persons like political party, charitable religious trust, business trust, REIT, etc., etc., etc. So all these specific sections are there. ITR 7 is for people who are falling under these sections. So generally, companies are required to file their return of income in ITR 6, generally, in a general balance. Then ITR 5 is for people other than individual HUF and company. Other than individual HUF and company, ITR 5 is there. That is how the 7 ITR forms are bifurcated. Guys, very, very important from an exam standpoint. You have to remember all these sections very, very carefully. Okay, Sharan is saying 56 pages. Okay, Sharan is saying 56 pages is ITR 6. Yes, guys, it has to be 56 pages. It has to be a long, very long form which is there. So yes, a very lengthy form, ITR 6. Guys, very, very important from an exam standpoint. You will be given that, Mr. X is earning salary income. He also has brought forward house property loss. He also is a director with so-and-so company. Please tell which form is required to be filled by Mr. X. This is the kind of question which you can expect from this particular section. So please prepare these ITR forms very, very well. So what is this ITR V? Guys, this is not 5, okay? This is not Roman 5. Please don't pronounce it as Roman 5. This is not ITR 5. This is known as ITR V. Guys, this is acknowledgement. This is acknowledgement. What do you mean by acknowledgement? When you file your return of income to the portal of the income tax department gives you an acknowledgement. Income tax department gives you a receipt that yes, your submission is done, your ITR is filed. So that receipt, that acknowledgement is known as ITR-V. This is the income tax return verification form where the data of aforesaid return income has been transmitted electronically without digital signatures. So when the details are filed, when the details are submitted, then ITR-V is generated. And ITR-V, whenever this ITR-V is generated, you get your confirmation that yes, my return is furnished well. Okay, sir, got it. Now, sir, is it our wish? Whenever we want to submit our return of income, we will submit, sir. Sir, 5 years down the line, I will submit my return after 5 years of the financial year. Is it my wish? Answer is no. It's not your wish. Timelines are specified by the Income Tax Act. Of course, if your income is earned between 1st April 2022 to say 31st March 2023, if your income is earned between this particular period, which means you have financial year 22-23, then guys, please tell me in yes or no, fastest fingers first, fingers on your keyboard. Please tell me if this is your financial year, then is it possible to file your return of income before 31st March 2023? Yes or no? Everyone. If your income is this particular earned in this particular period, financial year 2023, is it possible for you to file return of income before 31st March 2023? Is it possible? Is it possible? No. Very good answer. Very good answer. Yes, it is not possible. Because how would I know how much income has been earned? I would not know how much income has been earned. So it has to be the return of income filing date has to be the immediately next year, which is assessment year. Which is the assessment year 2023-24. Which is assessment year 2023-24. So the period post 31st March 2023, that period will be the period when return of income will be filed. So for different set of people, different return filing timelines are there. Let's see what are the timelines. So guys, the generic timeline for individuals, HUF, 31st July. The generic timeline, 31st July. Now let's move on to the specific timelines, okay? Where assessee is a partner in a firm and the accounts of firms are required to be audited under any law, or where the accounts of the assessee are required to be audited under law. So if you are an individual, okay, and you are also subject to tax audit, if you are an individual earning income and you are also subject to tax audit, then your timeline is 31st October. If you are an individual not subject to tax audit, then your timeline is 31st July. Please understand this fact. If you are an individual who's eligible for tax audit, then your timeline is 31st October, 31st October of the assessment year, 31st October 2023, the period immediately after 31st March of this financial year. Okay, so your timeline will be 31st October. But if you are an individual not subject to tax audit, your timeline will be 31st July. Now there is case number 3. Case number 3 is you are an individual not subject to tax audit, but you are partner of a partnership firm who is subject to tax audit. Your partnership firm is subject to tax audit. You are individual, you are not subject to tax audit, but the partner, you are partner of a partnership firm, and the partnership firm is subject to tax audit. So guys, for the partnership firm to get its tax audit done, the time limit is 31st October. And until that timeline, you will also not know exactly what is your taxability, what is your remuneration, what is your share of profit which you need to tax. So resultantly, you also will have to file your timeline, file your return by 31st of October. Once audit of partnership firm is complete, you will be able to know your remuneration, your eligible salary, your eligible deductions, etc., etc. And then only you can file your return of income. So for you, even if you are not eligible for tax audit, your timeline is 31st October if you are partner of a partnership firm whose accounts are required to be audited. Please understand the nitty-gritties. There's a logic behind it. It's not a ratification exercise. There's a logic behind it. Tax audit needs time. From 31st March till 31st July, there's hardly any time. There's hardly any time. Tax audit needs time. And since tax audit needs time, therefore, the tax audit timeline is extended to 31st of October. Tax audit timeline is extended to 31st of October. That is why the tax audit timeline is a little lengthy, is a little extended. Even if when you are not subject to tax audit, but your partnership firm is subject to tax audit, then the timeline is also 31st October. Next, where the assessee is a company not having international transactions. Now, if you are a company and you do not have any international transaction means cross-border transactions, which means you are not dealing with your overseas parent company, you're not dealing with your overseas subsidiaries or fellow subsidiary company, you are not having any cross-border transactions, then the time limit is 31st October. But if you are having international transactions, because guys, international transactions are subject to transfer pricing. For CMA Intermediate students, you will not be aware about transfer pricing. You will get to know about transfer pricing in your final syllabus. And for CMA final students, you are very well aware about transfer pricing. So if company is subject to transfer pricing, the date is further extended by 1 more month, 30th November. But if you are not subject to transfer pricing, then your time limit is 31st October if you are a company. So for company and for people who are subject to tax audit, the time limit is 31st October. For a company who is subject to transfer pricing, the time limit is further 1 month enhanced, 30th November. For any other person, timeline is 31st July. This is how the timelines are defined. And please note, all these timelines are relevant for the assessment year after the end of the financial year. Okay, sir, got it. Now, sir, I missed to file my return by 31st of July. I am an individual. I missed to file my yes, on or before 30th October. Yes, on or before 31st October. Yes, Abhishek, the earlier timeline was 30th September, but the revised timeline is 31st October. If I missed to file my return by 31st July, I'm an individual who's not having tax audit liability. I mistakenly missed my timeline of filing a return by 31st of July. Then belated return may be filed before 3 months prior to the end of the relevant assessment year. So if I talk about financial year 2022-23, I should have filed my return by July 2023. I did not file it. So I have to file it within 3 months, before 3 months from the end of the relevant assessment year, which means I have to file it by 31st December 2023. I have to file the return by 31st of December 2023. That is the time limit for belated return. Belated means you have delayed in filing your return. Or before the completion of assessment. If your assessment happens before that, then you know assessment will be the last date. 144 we have studied in our earlier live lecture. Best judgment assessment. So 144 is best judgment assessment. Before completion of assessment, you have to file your return of income, or till this timeline, whichever is earlier. If an assessee files a belated return, he would be liable to fees under section 234F, and 234A interest will be liable. Then revised return. Revised return is return where we have done some error, we have committed some mistake, and we want to confess on that particular mistake, and we want to rectify our mistake. Then Government of India gives us an opportunity to revise our return. What is the timeline? If the assessee discovers any omission or wrong statement, so I filed my return of income by 31st of July, but there was an error in that return. I will be able to revise it before 3 months prior to the end of the relevant assessment year. Again, guys, same timeline. I will be able to revise it by 31st of December 2023, 3 months prior to the end of the relevant assessment year. The relevant assessment year will end on 31st March 2024. 3 months prior to that, 31st December 2023. Up till 31st December 2023, I will be able to file the revised return of income, or before completion of regular assessment, whichever is earlier. Both the belated return and loss return can be revised. So a belated return can also be revised. If you have filed a belated return, for example, you did not file return up till 31st July. You forgot to file it. You filed it on 15th of August. Okay. And while filing the return in 15th of August, you committed an error. So you want to revise it. You can revise it up till 31st December 2023. So both belated return and return which is having losses can be revised. So revision is possible for belated return as well as the loss return. Now, one very important thing we had studied in our set off and carry forward chapter. Some losses cannot be carried forward if the return is belated. Some losses cannot be carried forward if the return is belated. That is a principle which we have studied in our set off and carry forward chapter. Please remember that principle. But over here, there's a different principle that belated return can also be revised and loss return can also be revised. Both the returns can be revised. All right, next is very, very important topic, guys. Please mark very, very important. Just a second, guys. Okay. So very, very important topic. Very, very important topic. Topic is verification of return. Very, very important topic. Topic name is verification of return. Verification of return means who can sign, who's authorized to sign a return of income, who's authorized to verify a return of income, because signing of return means that the income of return has been checked by someone. It is perfectly checked or properly done by someone. So who can verify a return, who can sign a return? This is the topic. And first of all, in case of individual himself can sign the return, or the person duly authorized by the individual can sign a return of income, which is power of attorney is there with some other person. If power of attorney is with some other person, then he can sign the return of income. Guys, I've got a classic example of this particular case. Okay. So, Mrs. Sood resides in United States of America. She has a son, Rohit, who resides in India. Okay. Now, Mrs. Sood sold a property in India and earned some income in India. So return of income is required to be filed in India. So Mrs. Sood requires to sign the return of income in India. But she is not staying in India. She is staying in the United States of America. So she will give a power of attorney to Rohit, her son, and son will sign the return of income on behalf of Mrs. Sood. So this is the case where by duly authorized person, the return of income can be filed for an individual. So either individual himself can verify the return of income, can sign the return of income, or a person who is duly authorized on behalf of that particular person can actually sign the return of income. Then for HUF, Karta can sign the return of income, or any adult member can sign the return of income. For a firm, managing partner or any other adult partner. LLP, the designated partner or any other partner can sign the return. Local authority, principal officer. Political party, chief executive officer. Yes, guys, you need to remember these names. These names are very, very important. All right. Then company, in case of a company, managing director, any director or any other person prescribed by person, insolvency professional, or power of attorney holder, liquidator, as the case may be. So for a company, first preference is either a MD or any of the directors can sign the return of income. Either the MD or any of the directors can sign the return of income. If this company is under insolvency proceedings, then only the insolvency professional will sign the return of income. If this company is under liquidation, liquidator will sign the return of income. If this company has got some attorney who is holding power of attorney, he can sign the return of income. Then any other association, any member or principal officer can sign the return of income. Any other person, such person or other person competent to act on his behalf. So whosoever is got a power of attorney, he's competent to act on behalf of some other person. That is how the verification is required to be done. So guys, two things which you need to really remember. ITR forms 1, 2, 3, 4, 5, 6, 7. Who's required to file what? Very, very important. Need to learn, need to remember. And these who are allowed to verify the return of income. Very, very important. Who's required to verify? That is an important consideration which you need to actually remember. Then last, yes, quoting of Aadhaar card is mandatory. In application of permanent account number, quoting of Aadhaar card is mandatory. Quoting of Aadhaar card is mandatory in case of return of income. Why, sir? Why Aadhaar card quoting is mandatory in return of income? I'll tell you a very simple logic, guys. Whatever transactions you make during the year, suppose I have purchased a home during the year. Suppose I have purchased a necklace for my mother during the year, a diamond necklace, okay, worth 5 lakh rupees. Suppose I have went to Ibiza or Spain for having a vacation over there. Everything will be captured in my Aadhaar card. For every transaction more than 2 lakh rupees, you need Aadhaar card. So Aadhaar card will be displayed on the documents and all the information will be accumulated in the Aadhaar card. So Aadhaar card will be mandatory to be coded in return of income also. So that the income tax officer knows that, oh, you are saying that your income is only 5 lakh rupees and you are going to Europe to have a vacation. How is it possible? So that linkage is possible only because of Aadhaar card. All your transactions which you have done during the year, all the expenses which you have done during the year, all those expenses are linked using the Aadhaar card. And therefore, quoting of Aadhaar card in PAN and return of income is mandatory. And last topic, but not at all least topic, permanent account number. What do you mean by permanent account number? Guys, this is an identification number. Just like roll number is given to you in your class, roll number is given to you in your class. This is the identification number of income tax. So the assessee is not known by his name because, you know, Nikkhil Gupta can be thousands and thousands people can be Nikkhil Gupta. So how would income tax know that you are which assessee are you? Income tax act will give you a unique number, which is PAN. Just like Aadhaar is a unique number for everything, for your entire social existence in India. Aadhaar is the card. Aadhaar is the number. PAN is the number for your existence in income tax department. That is permanent account number. TAN, TDS account number. That is your existence in TDS. If you want to deduct TDS of a third party, then TAN is required to be obtained by you. So yes, that's all for this particular session. And yes, guys, before we leave, please hit a like button. There are so many viewers live, but the like button has not been hit by most of you. The likes are very, very less. So please hit the like button. That is very, very essential to motivate me and to really instigate me to continue these live sessions. Sir, students also need to file a return if we are applying for loan. No, Dhruv, you need not file a return. If you are applying for loan, then you know, your scores and your credit worthiness is determined in a very different way. Even if you have not filed a return, that's okay. But yes, for applying loan, if you have filed your return of income in past, it will be helpful. It will be helpful, but not mandatory. It's not mandatory. So yes, guys, we'll be meeting in our next session. Please hit a like button before we leave for leave the session. Gaurav Anand says TAN for employer, PAN for employees. Yes, TAN is usually you know, applied by employers and not by employees. Live तो कल रात ही कर दिया था. Like तो कल रात ही कर दिया था. Very good. Very good, guys. All right. So see you in the next session. And yes, test है भाई, test. Test कब है? 19th of June. 19th of June is the test. 19th of June 2022. Evening time, most likely 7 p.m. I will confirm the timing on 19th itself. How will you get the details of the test? 9643 929913. You ask to join in the WhatsApp group and in that WhatsApp group you'll get the details of the test. So yes, join the test. We'll be meeting in the test on 19th of June. And yes, guys, the time is very, very less for all of you. So, you can do some smart study by watching these marathon videos. And these marathon videos are since chapter 1. Since chapter 1, these marathon videos are saved on my YouTube channel. So you can actually have the entire syllabus of CMA Intermediate Direct Taxation saved on the YouTube channel. And whatever chapter you think that you will not be able to cover in full scope, please see only the marathon classes which I have given on the YouTube channel. So yes, we'll be meeting next week with more set of sections and provisions. And before that, we'll be meeting on Sunday for the test of 3 chapters. What are those 3 chapters? Assessment proceedings, return and PAN. Return and PAN is 1 chapter, so 2 chapters actually. So we'll be having test of these 2 chapters. See you on Sunday and see you in the subsequent sessions in the next week. All the very best and happy studying. Bye-bye. See you in the next session.